get more on central banks and the economy. I want to bring in Neela Richardson, ADP chief economist. Neela, the market reaction seems quite clear. Are we looking at a taper tantrum and a policy mistake that potentially other central banks will follow?
You know, I think that what's different about this particular situation is how clear the guidance and how transparent the guidance has been to date. In fact, most people feel like the Federal Reserve, at least in the United States, will be tapering soon, maybe as early as this November meeting. And so I don't think we'll see the temper tantrum that we saw a few years back when Ben Bernanke was at the helm, because the expectation has already been laid, and the recognition that the inflation pressures are really due to supply chain bottlenecks in a way that's somewhat unprecedented. And so the uniqueness of the event, as well as the transparency and the communication, I think lays the groundwork for, yes, a market reaction, but not a spike or surge in bond yields, I don't think.
One of the growing questions here, Neela, is whether, of course, global demand is slowing. This flattening of the yield curve showing kind of increasing concern on that front. Does that argue that the risk of central bank hawkishness getting it wrong and actually choking off recovery is rising, or are you discounting that fear?
I'm not discounting anything in this recovery. I do think we have to take all threats seriously because of the unprecedented nature of it. But I do think we have to be cautious of going to any extremes. What we're seeing right now is, yes, there is significant supply bottlenecks, but we're also seeing some resurgent demand that is quite persistent. And if you look at consumers, consumers have been unflappable. Even though confidence surveys have shown some downward sentiment, we're seeing retail spending still stay strong. We're seeing consumer spending in durables out today still stay strong. We see household balance sheets, personal savings rates, all those metrics of households, not just in the United States, but globally, we're seeing strength even through the third quarter and the second half of the year. That does not mean that spending won't slow or that GDP growth will come down a few pegs from the high rocket pace we saw in the first half of the year. But it also doesn't mean that we're looking into the front eye of a recession. I think it's something way in between, in the middle of those two extremes.
Well, Neela, and that's what we're seeing in earnings. Like, companies have pricing power because demand is just that strong. What has shifted, though, is the roll-off of some of the extraordinary fiscal support for individuals during the pandemic. And I don't know if we've fully gotten what the impact of that will be while fiscal stimulus is still stalled out in D.C. here in the U.S. And I wonder, when do we see that margin squeeze? When do we see the consumer retreat?
It's the question everyone's asking. We're not seeing it yet, but it doesn't mean that we don't have a few months of transition. As you note, the government has been front and center in the recovery on the central bank side in terms of keeping this massively liquid market flowing for everybody, but also in all the direct payments, the expanded and generous unemployment insurance benefits, all of those things now fading out or log jammed in Washington, D.C. So for the first time since the pandemic struck, we have an economy that has to move increasingly independently. Right now, we're seeing Main Street be able to take that in stride, but with differences. We're not seeing the resurgence back, the shift back into leisure and hospitality spending. Consumers are still sticking with their preference for goods. We're not seeing those 5 million sidelined workers from the pandemic re-enter the job market in ways that were expected in the early part of the year. And remember, what drives growth long term is an increase in workers and an increase in productivity. Both have come down a notch from earlier gains. So there is something to watch as we move through this transition period to an economy that stands on its feet.